you can call on Tiffany.
Awesome. So first, let's introduce each one of you and pass the mic there. Introduce yourselves and who you're with, and that's it.
I'm Steve Kristiniak with Achieva Credit Union. Is that on?
It is on.
Oh, okay.
I'm Brian Mundelo, again with Gulf Coast Business Bank.
Mike Greenhoe, commercial real estate lender with Suncoast Credit Union.
Joseph Janoshka, First Horizon Bank, commercial relationship manager.
So the mic's going through the camera, just so everybody knows, for clear quality there. Awesome. So, just so you guys know, actually, I was in the banking industry for 18 years. I talked to 3 big banks and executives all the way up to Fifth Third, up to the top, and they're not really lending right now. Chase Bank, I talked to Chase, and he didn't seem to want to come in because they're doing the same thing community banks are doing, but wanting more deposits than anything right now. And then B of A, I just didn't call them. Has anybody ever done a deal with B of A in here? Yeah. I don't even think I ran into them when I was in banking for 18 years, so just wanted to give everybody an update on that. So awesome. So first question, what does a perfect package look like for a commercial real estate deal that is an investor deal? And let's start with apartment complexes. So what I'm asking this question for is how we could be better brokers for you to put together a better package for you to make the deals go a lot quicker and a lot more efficient. So apartments.
Okay.
What would you need in the perfect package? Go ahead, Joe.
At the get-go, it's pretty simple. We need to see if it's being constructed, we need to understand what these projections look like, buoyed by what an appraisal would look like. If the lease-up term is too long, then I would get disinterested. But again, your numbers based on your projections and how you got to them, and then what an appraiser would look at from saying the closer those two match, the more credence we'll give to your numbers. Now, if it's already up, then it's strictly a say, okay, what is how do we get to a net operating income of that property? We're going to stress it from a rate standpoint. We're going to stress it from a management standpoint. We're going to stress it from a maintenance standpoint, reserve standpoint. So if you can answer those questions and keeping the sponsor out of it at this point, 99% of the times I can tell you whether the deal is going to work at our bank.
Perfect. So one of you guys, others, tell us what you need from the, he said sponsor, but I think he meant builder.
And again, if you're building it, they are usually the sponsor.
Yeah.
So.
What would you guys need from the construction company that's building it?
Well, we will vet the contractor as much as we will the borrower. So any information you can provide on the general contracting firm, the better. I mean, even to the point where if you have some financials on the company, that would be beneficial, including references, jobs that they have done in the past to make sure that they have the capability and the ability to get the job done from start to finish.
Perfect. Brian, would you guys say that's the same for warehouse deals and office complexes?
Like Joe said, when it comes to that, you look at the company financials of where they are now. We look at the appraisal. I always look at the guarantor too. If the guarantor has liquidity, then that makes a whole different deal. So that's how I price it by.
Perfect.
I have nothing really additional to add because they hit everything, exactly what we look at. But I would like to emphasize that with any deal, whether it's warehouse, construction, apartments, or anything else of that nature, we're ultimately looking at the repayment source. What is that repayment source, and is it something that we feel is adequate? And then we're going to start looking at the contract. We like to see a guaranteed maximum price contract, or at least fixed price, something along those natures, because the cost plus gets very difficult from a financing standpoint. Those are the things that we like to see. We like to see a full package ultimately when we do the underwriting, but I think up front we want to see what the repayment source is going to be and what the contract costs are going to be.
How important would it be for a broker to bring you their WIP report? Does everybody know what a WIP report is in here?
Work in process.
Work in progress report. So basically, that's a report that's given to the banks that basically shows every project that they have going on, when it's going to be finished, what they have, where it's at in the process, and all. It's very important for you to bring that to them, because then they don't have to do a lot of deep diving into what's going on with these people that are building this, and it gives them an understanding how strong they are from a company standpoint too. Would you guys agree with that?
I would definitely agree with that, and it becomes a lot more important when you have a larger company and they're doing service work, let's say an electrical or an air conditioning contractor, for example. We're going to look at the WIP report in conjunction with their receivables report, and we're going to look at those receivables to see how long they're being stretched out and what type of job they're doing in collecting those receivables, because ultimately that's what's repaying the loan as they get paid by their clients.
Could I ask you a question?
Yes, sir.
about that? When you say a WIP report, you're vetting the construction company that you're hiring to build your building, is that what you're saying?
Mm-hmm. Yeah.
Absolutely.
Yeah, because, well,
If they won't give me their financials and we don't know them,
Yeah.
then the
The
deal
answer
would
is
not
no.
pass. We'd be done. I pass it to Brian.
yeah, because what happens is that they do the old shift of putting cash to another project, and so that's what they're tracking, is where the cash is going.
Yeah,
Because they're looking to do the loans and
Yeah,
put
we have
those-
a contractor worksheet, and maybe there's 12, call it pass-fail numbers. 3 or 4 of them are based on the WIP and as it applies to cash and as it applies to different things within there. So WIP is very, very important on the contractor side of it. Not so much the builder or the owner
Yeah.
of the place, but the people that are building.
Yeah.
Typically, what I do in our bank, I had a couple of deals now I've done over 10 million that I require a bond, period. I mean, so I don't have to underwrite the contractor.
Perfect. Does everybody understand the bond, what they need there and all that stuff? You want to,
The bond guarantees that the construction project will be completed, basically. And a good contractor will have a, $10 million bond at all times.
perfect. Awesome. So Rick put this down here. If a client comes to me and wants to do an SBA loan on a property with less cash down, what does the perfect package look like? But let me just ask in a different way. Are you guys doing a lot of SBA financing right now? Do you push your people down through doing SBA if they come in and they don't have enough cash? How does that work with you guys?
Well, the 504 deal, the 10% down if they don't have the cash, but we have an SBA department now, and we can do up to 100% if you structure it properly. By taking other equity in a home or just other investors coming in.
How long is that process?
It's different now.
I would say by the time you get the appraisal started, everything else, it'd be 60 days at least. The 504, I'm doing one right now, that's going pretty quick.
Yeah, the SBA will not do investment real estate, so you're talking about owner-occupied real estate at that point. If it's real estate secured, our bank doesn't really use the 504 because we'll do the same advance but on a bank side, which for the borrower or the builder, whoever's doing this, that means you don't have to jump through the extra hoops of the SBA and, as everybody alluded, the extra time. On the 7A side, which means there's no asset, it's like a going concern. You're buying the company. There's no, $1 million asset to justify the thing. Then the bank does do the 7As, but that gets put into a completely different category, and it would not be me, and in our case, it wouldn't even be a local person.
The only other thing I would add, excuse me, I'm doing 504s on case-by-case basis, but the amount of equity going in up front on the part of the borrower varies depending on property type. For example, I'm looking at a hospitality deal right now that's a 504. They're coming to the table with 25% cash into the deal. And then the SBA will fund 35, and then we're doing 50. It's a construction deal, so the way our approval process is structured and works is that we will go ahead and approve the deal and commit, subject to an authorization from the SBA for the final 504 debenture to be funded when the project's completed.
Then Brian, if you want to talk a little bit about, is it important to have the CDC involved in these, and kind of how does that work? With, just explain that process on the CDC process on
Well, the
504s.
CDC makes it much more easier. I mean, obviously, they have to be involved, and I use Scott Radway quite a bit. He's out of Tampa, and he basically has a deal approved and underwritten before, I mean, I even get all the financial information from the guys, so they're pretty good. But that's a company we use, and works pretty slick.
Yeah, the CDCs are certified development companies. There's a number of them across the state and actually the country. A lot of them have the deals pretty much underwritten, like Brian said, before they bring them to the banks. But there are certain instances where I recognize a deal that it's an ideal situation for a 504, so I'm going to take it to the CDCs. But we're all looking for the same information, with the exception of maybe a few documents. Everything that they collect is the same thing that we collect, so we share information with the permission of the customer. The 504s right now, as Joe alluded to, a lot of banks are pushing the limits in terms of what they can do conventionally. So you're seeing 80, 85, sometimes even 90% on owner-occupied properties that they're lending on, which takes away the advantage of the SBA 504. But the other advantage of the 504 is the long-term fixed rate that the CDC, or excuse me, the SBA portion is offering. So it's a 25-year fixed rate. So that can be an advantage depending on where rates are in the market.
Mm-hmm. Awesome. So would you say it would be beneficial for somebody to talk to the CDC prior to you guys and just vet the deal before they bring the deal to you, to not waste your time, or to at least know?
If it's a deal that I'm looking at as a prospect, or somebody that has a project that I identify as a 504 opportunity, I like to bring the CDC person in and do a joint meeting. Whether it's via Teams or video conference or in person, because they're going to be working with both of us, and like I said, they're looking for the same information. We both have to go to our respective institutions to get approval. In their case, they're going to the SBA. But if they're talking with one person, then they're talking with another person, a lot of things get lost in translation. So I like to keep everybody involved at the same time.
Ditto.
Yeah, so just to ditto that, when I bring a deal to like Brian or whomever on here, I bring in the CDC guy with me to the bank when I sit down with the bank, and I know kind of what's going on with it. That way they're talking together on the deals to make it more efficient.
So CDC is an approved construction.
It's the Certified Development Company, and what they are, they're a quasi-government agency where they provide, in the case of a 504 loan, they're providing a second mortgage for 40% of the purchase price, more or less, okay? The bank is going to be in first position for 50%, and then the borrower then contributes 10% equity.
But this is only on construction and development projects.
No, it can be acquisition. It's primarily used for real estate, but it can be used for machinery and equipment as well.
And 51% occupied.
Yeah, for owner-occupied projects.
51%.
Now, yeah.
Make your guy give 51%.
Now, when you're looking at when you're looking at construction,
I don't have to deal with this very much, so I probably know half what most people do on this stuff.
when you're dealing with construction loans on the 504 projects, the bank takes the full risk during the construction period, and only after the project gets its CO does the CDC come in and put their second mortgage on the property. So we're taking the full risk up to, in many cases, 90% or even more on the project.
Awesome. So how would you describe your bank's overall risk appetite for CRE loans and different aspects, multifamily, office, retail, industrial, hospitality? And is there anything right now that's absolutely no?
No.
It's a good question. I think we have a aggressive risk appetite within reason. Don't ask me to explain that. But we'll be willing to look at almost anything that makes sense. I think from a perspective of things that we don't want to look at other than anything that's immoral or illegal, we look first to see what the environmental hazards and risks might be. There's gas stations out there that potentially could be environmental hazards, but we've done gas stations. I think a lot of banks throughout the country say we don't do restaurant loans, yet every bank in the country has a restaurant loan in their books. So it really depends on the individual situation.
Yeah, I'm just trying to commercial, like what Steve was just saying, but at the same time, I know we are staying away still from land development loans, but I think pretty much every bank is.
Yeah.
The only thing that's on our prohibition list now, just recently, is hospitality. The one hotel deal that I mentioned earlier, I just got that under the radar, so.
Do you have one that's bad on the books? We have a buyer.
No,
Let me know.
So yeah, again, he said illegal or immoral. I guess it's not illegal to have a little pop-up slot machine thing. There's so many of them around. I think it might be illegal, but those are the type of things. And strip joints and things like that. It's just we don't want to get involved in it. We don't have any moratorium on any one product right now. I did this week. We were looking at a very large mini storage. And because their lease-up period, I alluded to it earlier, was outside of the term of the loan, it's like, no, we don't want to carry this loan for 5 years and have it just breaking even in 5 years. So our upper limit per borrower is like $80 million. As soon as I say that, I could point one out that's higher than that. But that's where we get comfortable with one borrowing group.
So let me add on to that.
Question real quick?
Yeah.
Sorry. How do you guys feel about lending on marinas?
We love them.
Do you?
Yeah, we've got a couple big customers in the Keys
I have
and here in town.
I have an LOI out right now on a marina. I don't know if that one will go through, but we're looking at others. So I'm going to give you my card. And
Yeah, it's going to come down to the cash flow.
yeah.
Again, you got to know the person from a character standpoint, and not that we know everybody in town, but we know a lot of the people in town from a character standpoint. And then it's going to come down to collateral and the cash flow and those submerged land leases.
Yes.
Those take a lot of time through the state to renew and things like that. So if you're bringing one, it would be very helpful to make sure that that thing is current. Because I did one that wasn't current, and we stuck our neck out there, and it took like 8 months for the state, and there's no speeding them up.
It is current, but only until 2028. And we have some private financing lined up, but we're looking to potentially, get a bank involved as well as that. So
Very interesting.
So next question. What does your approval work? And the reason I ask this is because everybody in the room likes to get paid as fast as we can. So, what does your approval workflow look like from an inquiry standpoint to commitment? And then who are your key decision makers up to what level in the organization?
I'll focus on commercial real estate loans primarily, and a lot of them are, obviously everyone wants to close as quick as possible, okay? So they're asking me what kind of close term should I put in the contract? And from the banker perspective, we want to see it as long as possible, okay? Just in case there's any unexpected items that come up. But typically, we're seeing 45 to 60 days as an average time. Number one, we've got to do our underwriting. In most cases, we've got to do an appraisal. We might be getting a survey, that type of thing. But I like to give myself some room because there's always something that comes up that at the last minute it's got to be done. And rather than renegotiating the contract, we like to have some flexibility. But yet I understand everybody wants to close as quickly as possible. And when I say 45 to 60 days, we've closed things in less than 30 days. But I like to just give myself that extra edge there and, under promise and over deliver.
What's your bank limit without participating deals?
I don't know the exact number, but it's probably between 25 and 30 million right now.
Okay.
What Steve was just saying too about once we get the package, we can close a deal in 30 days, whatever. But at the same time, our lending limit is $5 million at our bank, and our decisions are made locally and within a board. And if we had to get it done in a week, I can get the guys together and approve the deal.
Our approval process is all handled in-house. We have a loan committee that meets on an as-needed basis, and usually within 24 hours of submitting the package to them, they will give us their decision via email. And that loan committee can take us all the way up to our in-house limit of $75 million. And as far as turnaround time on closings, like Steve and Brian have said, we like to have as much time as possible. But that being said, a lot of that falls on you and your clients to get us all of the information that we need as quickly and complete and upfront as possible. Because I won't even start the underwriting until I have everything I require.
For First Horizon, right in my office, we have a $10 million approval authority. If I can make the numbers work and have a very good underwriter that sits right next to me, if we literally can go to lunch, talk through a deal. If we can make it work, I can get the $10 million approval authority to go along with it. So, but what Mike alluded to is the time frame that we're talking about. Again, on real estate, there's appraisers, there's environmental, there's things that we don't control. There's a time gap for title insurance. We got a title person in the back. I said they need a certain amount of days. Normally, it is not those three things that slow it down. It's the person answering our question, getting us that WIP report or whatever the heck it is. And yeah, it's very expensive to start the bank's engine of underwriting and then stop and pull everybody off and start doing what they think is another real deal. And the longer you wait, I call it deal fatigue. You know, people just get tired of, revisiting on this little thing and this little thing. It's like if you could get what we started with, a complete package together that you think is complete. There may be one or two more things that we need. There may be some questions from the CPA statement or from the tax return to the internal statements, but it's not the bank that slows these things down. It's usually between the bank and the customer understanding what they're giving us, because that's where the risk gets mitigated in that process.
If
Go
I could add something to that, I have a deal I'm looking at right now. One of my clients is looking to buy a property, and they've agreed upon a price, and he said, and I'm going to need about $500,000 for improvements. I said, okay, well, have you talked to a contractor yet? Because if I send this deal to underwriting, we have to know what the cost of those improvements are. We want to know what the contract is. Plus, I've got to send that information to the appraiser, because the appraiser is going to approve it as is and as completed. Without a set of plans and a budget, they can't do their work. Okay, so now they got to go to a contractor, and contractors are busy right now, so they might not be able to get in to see a contractor for a couple weeks. That's eating into the time on the contract to close. So a lot of those things have to be thought of ahead of time.
Awesome. What are the rates right now? What can we see rates being?
What do you want them to be?
Who's got the best rate up here?
I think among all my colleagues here, one day I might have the best rates, the next day Brian might have the best rates, constantly back and forth, and we're all in the same ranges. Suncoast and Achieva both have some rate promotions out there that are extremely encouraging. But that being said, I think among all of us, if we feel a deal is that strong, we'll probably do whatever it takes to get that deal within reason. We're for-profit entities, even though, well,
6 or
technically
7%?
right now you're probably seeing low to mid sixes for most deals, aside from rate promotions. Do you agree, Brian?
Yeah, I agree. I mean, I saw some close at 5.3. Is that what it was? Yeah. I mean, typically my lowest rate I've seen so far in our committee has been 6.25, and that was just last week. Yeah. And it was a standard deal. I mean, not perfect, but that's the rate we had to go with.
Yeah, we've got a 5.5% rate promotion on both owner-occupied and investment properties.
Yeah, so, I mean, those are good rates. Actually, when I was in banking for 18 years, mine was 7, 8%, so.
Yeah, there's two delineations here. An owner-occupied deal, you can get way more sharp on that. And the way that we may be able to get a little higher rate and the customer justify it is by our advances and things like that. It's very easy to get advances if we like the deal. So that's the way we would do that. On a income or an investment property, you can probably add 50 basis points, 100 basis points onto something like that. But yeah, I think if you're projecting your cash flow and you're using a 6-ish rate, you'll probably get a little better than that. But from a pro forma standpoint, you use a higher rate. If it works at a higher rate and you can get a lower rate, it's just that much better.
So foreign nationals, you guys work with foreign nationals?
Yes.
No.
We can, yep.
What do you need from, what, green cards, work
Green cards,
permit?
You need your tax returns converted to US dollars and 65% loan advance.
Okay. Do they have to have I heard this, I think, was it you told me they have to have a Florida driver's license?
I don't know about that. That's new to me.
Somebody said that to me, another bank the other day, said as long as they get a Florida driver's license.
Okay.
Again, the product type is very key to this too. If it's a real estate secured loan, you can mitigate an awful lot of that risk with advances and things like that. If it's a signature loan or something just in their good name, then I don't know, a lot of banks would want to do that. So
Awesome.
if it's real estate secured, we're not so worried about where this person is from. The only thing that I run into is an international company where you can't really track it down to an individual person that's the owner. It's some real estate investment company from Luxembourg or something like this, and you can't get down to an actual person. Then we just will say no, because you can't get through all of the tripwires that the Fed sets up for money laundering, basically.
Yeah. Awesome. Probably, is there any kind of no-doc programs or PPP loans out there anymore, or free government money, anything like that?
Ask Minnesota.
Yeah, right.
There's fraud. No.
Go to Somali daycare.
No.
I actually busted a Somali daycare when I was banking 15 years ago up there for that reason.
No, really?
Yeah, and it was on news for maybe a half an hour, and that was it. And that was 15 years ago.
Oh my God.
So they just moved the location and kept going, huh?
What was it? My client owned my client owned the building, and I went to first time I went with him to go tour the building since we're financing it. And I got out there, go, did you say anything interesting? He goes, what's that? I go, there was one kid in the whole daycare, and the government was giving him $1 million to his daycare center. And so I go, let's go back again next week. The second time I went in there, they wouldn't let us in. The guy pulls up an escalator and he goes, what do you want? I go, we want to come back. And he goes, you can't come in here. Bing, 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 bing. 15 years ago. Think about that.
You're going to be on Fox News tomorrow. That's being filmed.
We're gonna edit that. We're gonna edit that part of the film.
I don't care. I mean, it was done before, so, yeah.
Awesome.
James,
Yep.
I got a question for the guys.
Perfect.
Okay, this is something that just came up with me. I've got an owner that owns 10 acres, and then there's a 5-acre piece in between it, and then he owns the other 5, okay? The middle piece just went into foreclosure with a private lender, okay? They're asking $2,400,000 for it. The party that went into foreclosure did all the site plan work, phase 1, got an appraisal for $3.5 on the property. My guy's trying to buy it. They're going back and forth on price. He says he can get a loan on it. Would any of you guys loan on something like that?
Is there access to the property?
Oh, yeah.
Where's that in the foreclosure process?
If there's a development order on it,
No development
there's a deal.
on it, just site plans, and like I said, phase 1 is done, they did borings, they did everything but get the permits.
They get clean title, that's the key.
Again, permits can take a lot of time.
Title's clean, everything's done. It's just a matter, and he told me he could get a loan. But we're going back and forth on the price right now, so.
Yeah.
you know,
Well, you probably
would
could
it-
get a loan.
Yeah, the question is, under
Yeah, but
what
what-
terms?
Yeah,
Yeah, What type of building is this? What is it? There's all kinds of questions. I think there is probably a deal there. If there's a development order, it concerns me about the permits, because you can get all you want, but if you can't get the permit for the place, and, you know, I'm thinking it's zoned ag and he wants to put the building or something like that.
Commercial, and he's not gonna build, he's just gonna put it together and make a 20-acre piece.
Okay, again, if he doesn't have any plans to build, then I would be disinterested.
Yeah, me too.
Guy on the end, has
The
to
old-
shook his head.
He'll do it at prime.
He's thinking.
No.
150% advance?
No, again, I want to see what the plans are for the property, and most financial institutions, when they're looking at raw land or vacant land, they want to see that you've got plans to do something in the next 1 to 3 years at the
Yeah,
most.
exactly, 2 years.
Okay? But just hanging on to raw land for a long period of time, especially interest-only terms, I mean, those things are gone. Banks are not doing that anymore, or I should say the majority of banks are not.
Well, what if he told you he was gonna build? Would you do the loan?
Again, we need the honest truth.
Yeah.
These are other financial institutions.
Well, yeah, I don't know if he, you know, I'm just
Again,
saying.
I don't know how else to say it. Again, there's all kinds of scenarios we could look at there, but if it boils down to the guy does not plan on building on the land, then I'll just, or there's any question in my mind, it won't get past my desk.
Why is that? Why only building on land? Because land has not lost value, it has nothing but gained value in Florida for the last 20 years.
The Fed
You know, if I
makes
had
us
100 acres
reserve.
today, that was ag, I'd bet on it all day long versus some building with
Well,
rate of
ag's
10.
income producing.
Yeah,
Yeah.
ag is different.
I'm
But-
just saying,
Sometimes.
I'm just saying, like, what's the aversion or what's the, when
Joe?
land has done nothing but gain value?
If we have to reserve 10% on an apartment building or an owner-occupied building or something like that, we have to reserve 80% of our land. I mean, those are not the numbers, but it impacts us.
It's drastic.
Yeah.
It's massive change for us, and it's exposure to federal regulate. We're, into the camera, we are very heavily regulated. We're
Would you
dealing
do
with
it with a
people's
personal
pensions,
guarantee?
retirement funds, kids' savings accounts, that's what we're lending. So we have to, we are held to a very high standard to that.
But
So-
on that raw land, I could look at it this way too, I could say, okay, can the guy amortize over 10 years without any income producing? Then I would do it. You know, if he's a strong guarantor, a good global cash flow, yeah, we'll do that every day.
So,
Because the collateral is gonna be good, like you say, the value's gonna keep hopefully doing that.
Right, they're not making any more of it.
No, but again, think about it. How is the loan going to be repaid if it's not income producing?
What's the primary source of repayment? Always ask
Exactly.
yourself that when you're working with a client.
So
That's what
would
they're
you
gonna go
take,
to.
like, collateral or personal guarantee or something like that?
We
Well,
would-
the personal guarantee, if the guy's cash flow is strong, then that's my source of repayment. I'll look at it
Right.
that way. I'll do the loan to the property and maybe the individual co-signer or something like that. There's
40
always a way to get a deal done.
40% loan to value
Yeah.
with a bunch of money in the bank, 2-year term, and if he can't pay it off in 2 years, they're gonna foreclose on it, right?
Right?
I don't know about
Don't go into it.
There's an old saying I learned when I got into banking that says, buy dirt, don't get hurt. Look what happened in 2008, 2009, 2010. A lot of people got hurt by dirt.
But to that end, so, you know what, one of the banks that I do work with sometimes, the reason that I have steered some clients to them is because even though they will, you know, all the loans are generally 5 years, you know, but then you guys do an appraisal. And we all know that in 2009, 10, 11, there was plenty of shopping centers that never missed a payment that got taken back because all of a sudden the appraisal said, oh, your values are, you owe us $1 million in cash.
And that was that was the regulators that
Yep.
did this.
Yeah, I know.
If they left us alone,
I
banks would have
know.
made a
I know,
crap
but
load of
that's what
money.
happened, and so there is someone out there that is doing things with, they'll adjust the rate, but no reappraisal.
Yeah, I don't reappraise after 5 years.
You don't?
No, I do
Okay.
repricing period,
Yes.
but I don't
And
reappraise.
then it's like a 20 or 25-year AM.
Yep.
Okay, good to know.
Yeah, they just don't wanna see interest only, cause that's what a lot of the banks were doing back in the day, is interest only payments on land deals.
I wanted to find out what each of y'all would quote on a rate for a $1 million to $2 million TI improvements for a building that's already built, but we need to do tenant improvements for the building.
7.
7%? Yeah, all y'all around 7%?
Mid to upper sixes, I would say. Mid to upper sixes.
Mid to upper sixes.
That's,
I would,
Once again,
I
they
would
charge a
have to
full
look
point.
at what collateral is, because that's the problem with the TI loan, is you're missing one of the C's of credit. You don't have collateral, so then we'd be heavily dependent on that guarantor or that owner or that
Yeah.
operating company. So 7% is a fair rate. I don't know if I have to be there, but this would be a case by case, because you don't get a $1 million TI loan, just, and that's the only thing the bank gets. It's like, no, that's like a very risky loan, because there's no, from a collateral standpoint alone, that's something to mitigate that.
But Rick, if you do it, my client will lease the space.
Huh?
so I got 2 more questions for him, but is anybody else in the room? Because I got so excited when we were interviewing banks that I had a bunch of questions for him, but we're not going to go there with them. But anybody else have any questions for your clients you're working with or stuff, anything like that? Okay, awesome. So, last 2 questions. Give us a 30-second elevator pitch about your bank, and why should we work with you over the other guy here?
Oh, interesting.
These guys stink.
You know, Bill used to hammer me on this shit all the time, man.
No, Achieva Credit Union prides itself on the fact that we operate similar to a community bank, and we get to know our communities and know the people in our communities, and you build a relationship, okay, with the people that you're doing business with. And really, I think all of you can respect that, you trying to build a relationship with your clients so you have an ongoing business with your clients. And just doing simple transactions, yeah, we'll do that deal, but we don't have an ongoing relationship. That's not something we're really interested in doing. We like building relationships. And at Achieva, we are a nonprofit, but we pretty much can do just about anything that any bank can do as well.
Gulf Coast Business Bank, as you know, is locally owned. All of our owners are, board members are local guys, and our money that is deposited here stays in the 3-county area.
Suncoast, we are the largest credit union in the state of Florida in terms of asset size. We have ample capacity to be able to fund any deal that may come across our way. But at the end of the day, we're all basically offering the same type product and service. My personal philosophy is that what differentiates us from anybody else is who you're working with at that bank, i.e. me. And I work very hard to try and build that trust and that relationship with that, in our case, that member. You know, the only other thing that we can offer, and Steve can as well, number one, no intangible tax, that since we are a not-for-profit, and number 2, we have no prepayment penalties, period, across the board. So if it's a short-term type deal, somebody is looking to maybe refi or sell within the 5-year period or so within the term of our note, they can do so without penalty.
I think where we add value is, and I can add value to, and I have a lot of realtors that call me, they throw me deals all the time, is being able to basically thumbnail what the bank would look like on that product. And be quite honest, it's just mathematics for the most part. If the mathematics work, 90% of the time the deal works. Well, and I'm not saying I'm better than anybody up here, but it really is only looking at the financial statements or the net operating income, whatever. It's like 15 minutes if you know what you're doing. And then you know where the rate's going to be, you know what the term is going to be, just because that's what the bank does. And I call it a term sheet. They may be taking it to the next bank and whittling it down. It's like, okay, well, go ahead. It's like I'm in it. Where I add value, or the bank adds value, is that we can literally get you a yes, no, stop, start, continue, whatever you want to call it. It takes like 15 minutes for a good banker to look at something.
All I heard was yes. That's all I heard. I mean, awesome. So, last question, put you on the spot. Who's got some delinquent stuff in the bank that we can actually sell? And we'll put a name in the hat and pick it out. Don't say you got no delinquency.
We're pretty clean.
Yeah, we're pretty clean too. We had a watch
What's
list.
pretty clean mean?
We had a watch list committee meeting yesterday, and I think there was only one property in there that we're looking to foreclose on, and that's because it was an SBA guarantee, and this has been going on for a long, long period of time. And bankruptcies occasionally happen, but we've got a very, very clean portfolio, especially compared to what's been going on in the local market over the last 10 years. I don't want to say I'm surprised because we manage things well. We kind of keep an eye on things, so if there's a problem, we're aware of it, and we try and work with our clients to mitigate whatever that problem may be. The quicker you can work with a client, the better for everybody.
Nobody wants that SBA deal, believe me, because I had to unwind one in my life, and it was hell.
Yeah.
It's crazy. Anybody?
We're an $89 billion company. Yeah, we have bad loans. I don't have any in my portfolio. I know there are some in this area, but again, once it get to a certain point, it's like other people take over, and it's not in my portfolio. And maybe if I come to the next meeting, I'll bring one. But
We would love to be in the
yeah.
middle of those
I
before
do
the other
know-
guy takes over.
I do know there's a company in town. I think they're on Fowler somewhere that's going out of business. So it's like there's a real estate deal there.
Joe, you don't have bad loans. You have loans that went bad.
Okay.
Awesome. Anybody else got anything else?
Yes, I do. If anyone has any business relations or anything in Tokyo, I'm flying to Tokyo on Monday, and if there's anyone I should meet on your behalf, I'll sign whatever you want me to sign, but if I can facilitate anything for you, it's a long way to go, so I thought I'd just mention it.
Let me look at my contact list.
Man, we have great sushi here.
Yeah.
Japanese. Okay.
So I have something unique that the bank does. While I don't agree with it, it goes through the retail side. We have a no-doc loan for operating companies. That means you don't have to supply your tax returns. You don't have to do that. They go up to $150,000. It's based on your credit score and a quoted revenue number of the company. And then we can basically, now the rate is not that advantageous, but it compares favorably to a lot of small businesses are putting these things on credit cards and things like that. So it is, it's something, we do 90% on owner-occupied deals right out of the box. I don't like policy exceptions, but if there's one to do it on, it's owner-occupied. If it's medical, we do 100% loan-to-value. I mean, there's not even a question. We just do it. So on the investment portfolio side, we have 25 to 30-year amortizations for the right borrower. So, and depending on the tenant, we can do no personal guarantee on that.
I think you spoke for everybody there, right? For the right customer.
Yeah.
Awesome, guys. Appreciate it. See you guys March 12th.